Ladies and gentlemen, we have the tightest market day ever since the COVID-19 market drop in late February. I'm going to share with you the 15-minute candidate reversal. The first time we're releasing it for the public, we're going to go over the Mark 5, the Know Your Limit 21, 3 strategies. We're going to go over the A plus trigger video that we did yesterday to predict the volume today. Does it actually work? And we're going to share with you the fallacies of Wall Street. And this is going to help you how to approach a tight market and take advantage of it. I am Mark Melnick. And if you stay tuned, I'm going to show you how you could save 90% off our services. This is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to a very special edition of the Newsbeat Show. I'm going to teach you how to trade this tight market by sharing with you 3 setups that are working now. Not 100 setups that work in some environments and fail in others, and work in some environments and fail in others. The 3 strategies I give you will inevitably fail in a certain market environment in the future. I don't have an ego which is going to prevent me from saying that. But what traders really need to do when the market changes and evolves is they need to be part of a strategy that is working right now, because strategies that work today are going to be the strategies that most likely work tomorrow. And when people say, oh, I backtested a strategy for 5 years, what I have realized in my 21 years as an active intraday trader is that 99.9999999% of those strategies don't work today. So it's kind of funny how backtesting works. Honestly, you would much rather have a backtesting for the last 2 weeks that's effective than a strategy that produced good returns over the past 10 years because maybe it was failing for the past 6 months. Do you really want to apply that strategy tomorrow? Hopefully the answer is no. 3 free strategies: how to trade the market, fallacies of Wall Street, going over our A plus trigger methodology from yesterday, and all that if you just agree to the following. I need you to pause on this next slide, read it in its entirety, and then hit play. Thank you so much for reading this. All right, well, now that you did that for me, it's only fair that I spend this entire day and give you guys a totally awesome lesson for free, since you actually read all that fine print. I mean, how often do you read the fine print? But you did it for me. You did it for me. I totally owe you something for that. Thank you so much for doing that. Now we're going to go over, we're going to start off with fallacies of Wall Street. And I think this is an important part to start with. Then I'm going to share with you my 15-minute candidate reversal, the first time we're releasing it to the public. Newsbeat Live members get access, of course, way in advance. We're going to share with you the Mark 5 strategy and the Know Your Limit 21 strategy. Those are the 3 strategies that are working now. And then we'll go over the A plus trigger as well from the video we did yesterday. Okay, so we're going to talk about fallacies of Wall Street. And we're going to start off with the people who say you need predetermined stops on every trade. And, again, as a day trader, you might be saying, yeah, of course you do. The truth is, yes and no. The truth is, you can have your stop built into your position. So, for example, if you're risking $500, some people will say, well, you could buy, 5,000 shares and risk 10 cents, or 1,000 shares and risk 50 cents with a hard stop, and that's how you risk $500. Or you could buy $500 worth of options and you don't need a stop at all, because the most you're going to lose is that $500. So, first of all, most billionaires do not agree with this. You think when Warren Buffett buys Apple, he's like, "All right, we're gonna buy some Apple over here. I want a hard stop loss at $183.32, and that's where we're gonna put in our stop loss." You think like Warren Buffett thinks like that? No. And the truth is, if you manage your risk properly through options, you don't have to do that either. Most traders can't choose a good level to exit ahead of time. This is the biggest thing here. And yes, I know you could look at the bottom of a candlestick and say my stop should be there. But in my experience over the years, most traders aren't qualified to actually make that judgment and say, statistically speaking, putting a stop underneath this candlestick is a good place to potentially stop out, and buying above this candlestick is a good place to enter. And that is, again, one of the top reasons why most traders lose. And I'm going to show you strategies which take advantage of this and teach you actually how to do it. So it's all going to make sense. You can use options to predefine your risk instead of relying on a stop, just as I said, because sometimes you get stubborn, right? Sometimes you get stubborn. Sometimes you're holding a position, it goes against you. You don't want to get stopped out. I feel you. I don't either. That is why you can use options to predefine your risk when it comes to stop loss in common stock. You pretty much need it every time. The next fallacy I'm going to share with you is that it's okay to be right less than half the time or 50% of the time if your overall account is up. And here's the truth. We are not robots. The reality is actually kind of messy. The numbers in the statement above right here, this statement above right over here, does not take into account your psychological health. You need a consistent win rate, otherwise, you will rely on a small number of home runs to carry your trading. And yes, I know people will say you can have a Sharpe ratio of 2, 3, 4, 5, and you could have this and you could have this. And I remember, like, I mean, I've had Sharpe ratios that just literally blew people's minds on certain years of my trading, especially when when there's a lot of news flow or there's a lot of great setups or the market is breaking out in like a really like volatile fashion. Yeah, I've had good Sharpe ratios, but here's the bottom line. Mathematically, what makes sense doesn't take into fact your psychological health. A robot might be able to do it because a robot isn't going to be curled in bed in a fetal position saying, I shouldn't have bought this stock. Could you imagine a robot like suffering psychological toxicity? You need your psychological health, which is why I'm going to show you three strategies that are working well over 70% of the time in the current environment. So, again, it is a fallacy that you can be right less than 50% of the time with your account up and be considered a successful trader because 99% of you won't fit in there. Yeah, look, there's an exception. I'm not saying that there's nobody out there who does it. But look, do you want to are we trying to be LeBron James here or are you trying to be the person who's making money in a career as a trader? Technical indicators don't work because they're not 100% right. Tier 1 firms disagree with this. Tier 1 firms. Technical indicators don't work because they're not 100% right. That's a lie. Technical indicators do work because that's how these algorithms are also based. They're also based on news flow, if you didn't know. But yes, the big Saxo banks out there, the big Goldmans out there, the big firms all over the globe. All the tier 1 firms all over the globe disagree with that. Next, millionaires use every piece of technical analysis indicator known to man to make money. Anything that you have access to, whether it's a moving average or an RSI or this, everybody has access to that information. And millionaires use this to make money as well. And another fact is you don't need to win on all your trades, even if technical indicators don't work 100% of the time. You just need to make money on most of them. Next, fallacy is that you don't need to catch the bottom. Now, this is sort of a weird one because you were probably taught that you do not need to catch the bottom of a move. Yes and no. People who tell you you don't need to do it it depends what environment you're in. Are you in an active environment? Then you're absolutely wrong that you don't need to catch a bottom in an active environment. If you look how we were calling tops and bottoms in February and March before this bull market started, yeah, I said it, bull market. I was doing it with what would you guess my accuracy was? 85 to 90% that I could call a bottom or top and catch it. So, yeah, that is one of the fallacies. And again, we're going to go into the strategies in which you could do now, which help you exploit this, which is why we're talking about this aspect first. People who tell you that train traders to watch the train leave the station every time. You're basically taught that you don't need to catch the bottom. You're only supposed to buy and sell from the top and bottom of a candlestick, which, ironically enough, 2 out of 3 of the strategies I show you today are going to do that. But you should be able to catch the bottom. The reason why people preach that you can't do it is because They can't do it. So they feel that most traders can't do it. It's preached because most traders cannot do it consistently. Next fallacy, and this is especially true for this type market, and we're going to show you ways to take advantage of it. Just stay tuned. Is the harder you work, the more money you'll make. Most traders are only good at certain times of the day. We literally did a little bit of a questionnaire in which I asked in the Newsbeat live room and people I know who are traders, and I took a consensus of 25. I took a consensus of 25 profitable traders. And these are traders that I have a lot of respect for. Let's put it that way. They're good traders. And this was from the other year. And it basically showed that out of these 25 traders, when they looked at the times they made their money, the majority of them were making it between 9:30 and 11 a.m. Now, why was this happening? Why was this? And then, by the way, just so we're clear, this is 2019. I know this is a little bit old, so I said this year. I should actually cross that out because it was this year when I wrote it, but I should say 2019, just to be straightforward with you. Now, here's the funny thing, and this is going to teach you how to trade this market. Because if you look at the daily back in January 2019, look at what the market was doing from January to March. Death grind, death grind, death grind, death grind up, right? So when you actually look back to it, it's not a surprise that in a death grind market, the majority of the money is actually made in the first hour and a half, which is beautiful because the strategies I'm going to show you right now, sometimes three of them, but definitely two of them usually work in the first hour and a half. So there's a time, and I'm telling you, go ahead and look at your number and look how much these are profitable traders. They lose from 11 to 4. They lose. They win in the first half hour. They win in the first hour and a half. They lose after after 11 o'clock a.m. Eastern Standard. Now, granted, it's a blanket statement. It's only 25 active profitable traders who, again, Newsbeat Live, very consistent traders. Don't need to go into how well they're doing. And that is a very key thing because this is actually coming true again. You see, when we're in a bear market, you can make money any time of day because something would come out and the market would flush at 2 o'clock. Now that we're in a bull market again, by all definitions, we're 20% off the lows. It's a fact. It's not an opinion. It's a fact. We're in a bull market. I'm not saying the economy doesn't have trouble, but we are in a bull market and you should trade it as such. And that is the key. Many day traders make a living before 11 o'clock a.m. Walking away and taking a break isn't lazy, it's an act of preservation. The most fearsome hunters in the world, lions, bears, spend most of their time chilling out. You know what lions do most of the day? Lay down under a shaded tree. Speaking of the African Serengeti lions. But you get the point. Not the lions in the zoo or whatever. I don't know. Whatever. You get the point. Wild lions, right? Bears, they hibernate for months. The market is the same thing. I know you probably have a wife, a husband, a girlfriend, a boyfriend, somebody who is something else, and they're probably coming to you, or somebody you love is the bottom line, and they're probably like, you need to make $500 every day, or you need to make $200 every day, or $1,000 every day, or $700 or $300 or $220 to support our lifestyle. And you're sitting there like as a trader, like, okay, I need to do this every day. But some markets, the food is coming in droves. In other markets, it's a little chilly outside. So right now it's chilly outside. There's not a lot of prey, stocks, consistent things that you could do to make money at every time of day. But in the morning, there is. And I'm going to show you that. The next one, which I never understood, is that you need to listen to the media. Turn off your television. It's mostly a distraction. They talk about events too late for you to take any actions, And in my experience, they never provide an edge for your trades. There was actually a time where they did, back when I was trading in 1999 at a place called Tradescape, over at 57th and Lexington in Manhattan. Whatever, they had like the whole wing there, and I was trading there in '99. And yes, CNBC was a tremendous edge. I remember Plug Power. Joe Kernan's wife came on TV. Not Joe Kernan's wife. Joe Kernan came on TV, CNBC host or commentator, and he said that his wife's favorite company was Plug Power. I remember I bought like, I don't know, like 2,000 shares of Plug Power, and I think I made like 30 points in a matter of like 20 minutes. That is the value of CNBC circa 99, circa 2000. Not anymore. Turn off the television if you're listening to it. They never provide an edge. They just make you feel like a professional by blabbing in your ear all day. Next fallacy, especially if you're an option trader, you know this, is that you need a huge bankroll to make good money. If you're trading common stock, generally the answer to that is yes, but options allow you to really turn that into a fallacy. You don't need to go on margin. I'm not making any claims to what a pattern day trading rule is, but some traders in the room have cash accounts and they could trade as much options as their cash account allows them every day from what I read in the room. Never tell anyone to buy or sell a security, but you don't really need to go on margin. Options change the game by magnifying your returns. I have seen hundreds and hundreds and hundreds and hundreds, at this point, thousands of traders disprove this. And then, of course, you probably heard this all over the internet that high frequency trading makes day trading obsolete. We all know you'll never be faster. That's why the A plus trigger thing from yesterday teaches you how to front run the algos. I'm going to show you that momentarily. You can submit high frequency traders and algos to your will by understanding this. And if you learn my techniques, I'm going to teach you how to front run them. So those are the fallacies of Wall Street. I want to go over the A plus trigger, and then I'm going to teach you 3 strategies right now. We're going to teach you 3 strategies right now. We're going to literally show you how to take advantage of choppy markets. We're going to show you exactly how to do it. Okay. So just real quick, if you remember on Tilray yesterday, we did a video, and I just want to give you a quick, won't even be a 2-minute follow through on this one. We were talking about the A plus trigger of $8.51 and saying with practical, almost 100% certainty, you can predict the volume. You can predict the volume exploding when that level hits. So what I'm going to do is I'm going to show you Tilray from this morning. This was the name we talked about yesterday, and we're going to just add the volume because we said that you could predict algorithmic volume before it happens. And what I want you to see here is what happened when Tilray hit that 851 level today. It actually hit in the pre-market, and it actually hit right over here. You see the high of this bar is 850. I don't know if you could read that in the top left, but the 4:51 a.m. to 4:52 a.m. bar was 850. Right over here, between 4:52 and 4:53 a.m. Eastern Standard this morning in the pre-market, look at that volume spike. You did 6,500 shares on that candle. And remember, I said it would be comparatively to the other candles around it. The other candle, the last candle was 1,000, so it's 6.5 times larger. Now, what happened after this is after the market opened, the stock actually opened below. The stock actually opened below 851, so you're able to use it as a trigger yet again. And I'll bring it up on the 5-minute this time, but you could literally pull it up on a 1-second chart if you wanted, just to highlight the volume here. Here's the first 5-minute of the day. Um, it did hit 851, and you obviously see explosive volume. Let me just show you on the 1 minute. It'll be easier to see because the first 5 minute bar always has volume, right? Edit chart properties, never. Okay. So right over here, 1 minute of Tilray today. Just wanted to show it to you. Here's where the market opened, right over here. It's the first 1 minute candle. The high, well, that was on Friday. Whoopsie. Right over here is Tilray today. The high of this candle is 850. Notice the A plus trigger is 851. Look, go down in volume, down in volume. You hit 844 right here. Right over here, you hit 851 for the first time. Look how you explode in volume compared to the prior candle. The prior candle was 77,000. The 1 minute bar that broke it was 348,000 and was followed by a 446,000 volume candle. Predictable. How many of you guys watched yesterday's show and did really well in Tilray today when you broke 851? Hopefully, a lot of you. Okay, why don't we just go to the strategy? So we know the market is tight. We know that we have to trade early because the majority of the action in a tight market, short of breaking news, look, if some silly news comes out, something can happen. But right now we're in a complete and utter chop fest. So what I am going to show you is I'm going to show you the Mark 5 Know Your Limit 21, and for the first time ever revealed to the public, we're going to show you the 15-minute candidate reversal strategy, which has been working in this market as well. And with these names over here, I'm going to just show you some names that were on our radar today, names that, members caught, and names that we're just basically talking about within the room. So obviously, one of the names we were obviously looking at today was indeed Tilray. So what is the Mark 5 strategy? I'm going to make it really easy for you to understand here. We're going to talk about it right over here. So you're basically, it doesn't have to be an earnings name. It could be any name in the Newsbeat live room. This was actually an older slide. You're waiting for the first time a 5 minute bar does not break a prior 5 minute bar high, and then you simply buy through the next time it does. I know that sounded a little confusing, but when I show you exactly what it means and I actually show you the picture and I draw on the chart, they say a picture is worth 1,000 words. I am a very big believer of that. You're going to see exactly how easy this strategy is. So right now we have a 5 minute chart right here of Tilray today. Why not, right? Why not? So what you're basically looking for is you have to wait till 9:40 a.m. That is what you have to do. So step one, and I'm going to show you the strategy better than that slide. Step one, wait till 9:40 a.m. Eastern Standard Time. You're basically waiting for two 5 minute bars to close. This is, again, a 5 minute chart. Step two, wait till a prior 5 minute bar high does not test. Step three, and this is for the long Mark 5. We'll use long as an example. Very simple. It's actually a lot simpler. I'm going to make this font a little bit bigger for you, and we're going to keep it yellow. There we go. So you're waiting till 9:40 a.m. So right over here, you have step one. This is a 5 minute chart, by the way, just so we're clear. So two 5 minute, the market opens, the market opens at 9:30. So by 9:40, two 5 minute bars have closed. So literally, step one is sitting on your hands, which is such good practice psychologically speaking, by the way. Step one complete. Like, think of it like a video game, like you win or winner. Like, that's all you had to do is do nothing for 10 minutes. That's it. I know. Believe me, for some people, it's harder than it sounds. I'm making it sound easy. For some people, it's actually harder than it sounds to you. Try doing nothing for 10 minutes. Kind of difficult, right? So step one is complete. You literally did nothing. Now comes in step two. This is on the very next candle, the high of candle number 3 did not go through the high of candle number 2. So the high of candle number 3 did not go through the high of candle number 2. And just so we're clear, I'm just going to go ahead and label these. Oh, that's too big of a font. Just going to go ahead and label these fonts here. So that's candle number 1. There's candle number 2. Here's candle number 3. Here's candle number 4. And they're just 5-minute bars, right? So just it's good to put a label on these things so you know exactly, what they are. Candle number 6, whatever. Okay. Now I'm going to zoom in for you. Ooh, big letters. What on earth? Okay. So right over here. So notice how candle number 3, the high of this candle right here, did not go through the high of candle number 2. Notice that? The high right here did not actually go through. So that is that is very important to note. So right over there, you actually completed step number 2 is complete. And keep in mind, you actually didn't do a trade yet. Step number 2, complete. Complete. Now, of course, step number 3 is you're going to have to buy through the next time a prior 5-minute high broke. And it actually happens right over here. The high of this candle is 910 versus 909, so I'll show you back in the picture. So candlestick number 4, right over here, and I'm going to just I'll use a different color. I'll use white for this one. Right over here, you're buying on candlestick number 4. Buy through candlestick number 4. Or when the stock, not or, note, when the stock breaks the high of candlestick number 3 at $9.09. So what you're doing here is, zoom in again, you're buying on the 4th candlestick today until Ray as it breaks 909. You can leave your stop at the bottom right over here, and you could literally just trail it if you want. Every single time a 5-minute bar closes, you can just literally trail that stop higher. Me personally, I like to lock in the money. If you were to trail it like this through the bottom of every 5-minute low, you would have gotten stopped out right over here on this tail. And just to give you an example of a $9 stock getting stopped out there, you would have been able to ride the stock from 909 to 953, and it hit a high at 975. The truth is, this move right over here, this little pop here, the options probably moved about 50% of your money in 5 minutes if you're in the option. If you're in common stock, you made 5% of your money, approximately, just on this 5-minute candle, right? Whatever it is. About 5%, give or take, whatever, you get the picture. So that is the Mark 5 strategy. The beautiful thing is, now from psychologically speaking, the beautiful thing is you'll notice that it's all happening within that 9:30 a.m. to 11 o'clock a.m. range. So you'll notice that it's actually still working. It is actually still working. And literally, when you buy in here, you might say, where do I take profits? Honestly, I'll tell you right now, there is probably no way I'm holding it all the way up here, unless it's a small position on the house. Honestly, I'm out on this candle. I'm out on either candle 4, not candle 4, but I'm out on candle 5 right over here. Or the majority of my position was locked in profitably on candle number 5. Why? I don't need to trust this market. The target on a Mark 5, by the way, is always day highs, the ultimate target. But again, I don't even take that into serious consideration either. I literally just take the money. It's a breakout trade in a very choppy environment. And again, I just want to show you this. Yes, the triple Qs today put in a range of $2.13. That is the tightest range since we dropped in late February. Yes, by far the tightest range. The second tightest range was 50% larger than this, with a $3.21 range done on April 20th. Was the last tightest range, 50% more approximately than today's range. But these strategies are working in the current environment, which is why I am sharing them with you. The next thing I want to share with you today is a very, very simple strategy, and it's, of course, the Know Your Limit 21 strategy. The Know Your Limit 21 strategy, it actually works for the 8 and 21, so I guess I'll just show you both. But the Know Your Limit strategy is something that I absolutely love. This is not a breakout strategy over here. This is a strategy that, and I'm going to show you, it's the same on the exponential 8 and 21. It just, you could use both moving averages, to be honest. But it's a strategy that I really like here. And I guess I'll show you how it worked on some of the names we're watching. I caught it on the video today, but I am going to show you exactly how I caught it on Tilray. So I'll talk about it first, and if you're confused after that, it's okay, because it's going to be a lot easier to understand once I actually just pull out a picture and show you exactly how it works. You choose a Newsbeat name. We're watching Tilray today. I'm not sure if did I put on my list? Either way, we're watching in the morning if you're in the room. The first time it hits and breaks the 80 EMA or the 21 EMA, you simply go long. It's honestly, it's that simple. It really is that simple. Notice how I put the 80 EMA in yellow and 21 EMA in blue. I mean, I could show you both, but for the first example, I'm going to show you the 21. You simply scalp out. It's that simple. So right over here is Tilray, and I'm going to literally talk about how you have to wait for the strategy in English. Wait for the 21 EMA, which is the blue line, to test and break underneath. Step 2, buy stock. Again, I would never legally tell you to buy or sell a security. This is legal purposes, demo account only. Buy short puts. I don't care. However you want to buy the stock, calls, short put, whatever you do. All right. You're looking for a bullish move. That's it. That is the whole strategy. Now notice the exponential moving average. I will give you a hint over here on the exponential moving average. You have to make sure you do the following if you're using a different software or whatever. Make sure you do not use pre and post market data when determining this moving average. So if you were to actually include pre and post market data, this 21 moving average will actually change. And I could see I typoed there, but determine if is my fancy way of saying determining in my new made up language. So you're basically, here's a 5-minute chart. Here's a simple 5-minute chart of Tilray from today. Very, very simple. Just type that in so you guys don't get confused. You could always rewatch this video. And you're just basically waiting for the first time, that this blue line touches, literally. So you're waiting, you're doing nothing, 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 nothing. All of a sudden, right over here, right over here, you test for the first time. So here's step 1, 21 EMA, which is an exponential moving average, tests and breaks. Step 1, 21 EMA, tests and breaks. On that same candle, step two, go long stock options, et cetera, whatever you use to bet bullishly. And you'll see it's not the sexiest trade in the world, but it gave you a good risk reward to lock in some money. And in terms of what the real move looked like, it went from 902 to 931, which is a 3% move. Trust me, if Apple moved 6, 7 points, you'd be thrilled. It's just because it was a cheap name. We highlighted it yesterday that I'm showing it to you today. I actually did it right over here in NVIDIA today. Right over here. I bought when NVIDIA flushed down here and it popped over here and I sold out. Look how beautiful that is when NVIDIA tested this blue line here today. Some traders held it all the way up here. I didn't. I was out right over here on this candle, right over here. Dropped, but underneath the blue line, not at, underneath, and it popped. And I was out. My trade was over. Over. I think I made 10% of my money if I recall correctly. Now going back to the Tilray example, you could also do this strategy on the exponential 8. Right over here, breaks 928, hits 921, goes up 46 cents, goes up 5% in 5 minutes. Look at that. Look how beautiful that is. And again, I'm not sitting here waiting for it to go down. Just like in my NVIDIA example over here, I wasn't waiting for it to go up. I just sold out right away. I would do the same exact thing over here. Why? Why not lock in money? Making money is fun. That is the know your limit 21 strategy. Very, very, very effective way to make money. Now remember, if you have any questions about this, reach out to me. Newsbeat, one word, Newsbeat, Newsbeat at t3live.com. Moving on along, I'm going to unveil to you a strategy which was exclusively available for Newsbeat Live members. When new strategies come out, Newsbeat Live members get initial access. But since we have something special happening today, I figured, well, what the expletive? I will go ahead and share with you some awesome things today and try to bring as much value to you as humanly possible. Make sure you stay tuned at the end of this video if you are not a Newsbeat subscriber, because we have a deal that is 90% off. So let's go ahead and share the value with you. 15-minute candidate reversal. Very simple. You choose a name with a large gap up or down. In the example I show you right now will be a gap up. You wait for the first 15-minute bar. You wait for the first 15-minute bar to close, which happens obviously at 9:40 a.m. Eastern Standard Time. If any of the following moving averages have not been tested, if any of the following moving averages have not been tested, which are the 8, 21, 55, and 100 exponential moving average. I personally don't use simple moving average, but you know, it's all good. That's what it is. All right. You basically, and by the way, and this strategy has been doing pretty damn well. I mean, this strategy has been doing pretty damn well in this environment, especially a choppy environment, and you could actually have more trades than one. And basically, the next time a 15-minute bar breaks the prior 15-minute bar high, you basically go long. You basically go long. So you're you're waiting for any one of those moving averages I showed you on the screen, the 8, 21, 55, and 100. You might ask why those moving averages. Honestly, there's probably an infinite number of strategies, but that's the strategy that I found that worked. So I am using that as an example and sharing it with you. Now, let's go ahead and show you how it works. Let's pull up a 15-minute chart. I'm going to just show you a nice example, a nice looking example from FedEx today. The truth is there are other names which people caught in the room, but I think this one really highlights it. So the exponentially moving average, the 21, the 155, not sure why they're there, probably the way I added them. But you can see right here, they're yellow for the 8, blue for the 21, white for the 55, pink for the 100. So right over here, um, FedEx opens up for the day. It's a large gap up, and you put in a red bar. That's the first 15-minute candle right here. And what you're doing, just to explain the strategy for you, is you're waiting till any one of these lines hit. Now, based on the way they look like, the yellow line is going to hit first, and that will usually be the case. That is, again, just to highlight for you, that is the exponential 8 moving average, the yellow line right there. So you could see for the first time it hits right over here. And just like by the way, just by the way, what you see before here is obviously just yesterday's candle, so it doesn't even matter. You could just erase them or scribble over them. This is how the stock opened up today. So you're waiting for the first time a moving average hits. It actually ends up happening right over there for the first time between 12, 12:15 and 12:30. Between 12:15 and 12:30, actually, I'm sorry, 12 to 12:15, this bar hits the exponential 8. Then what you're waiting for afterwards, after that bar hits, is you're waiting for the next time a 15-minute bar breaks out. Meaning similar to the Mark 5, you're waiting for the top of the next candlestick to go. It doesn't happen right over here, as you could see. Doesn't happen over here because this candle did not break that candle's high. You could see right there. So it didn't actually happen over there. But check it out. It actually happens right over here on this candle right over here. So on this candle, give you a nice little check mark there. That is the candle you're buying through. Your stop is going to be the bottom right over here. So you're basically entering in on the white and stopping out on the red, and you're looking to simply make money. And in this case today in FedEx, again, a very pretty looking example. I'm not saying they all look like this. I'm not claiming that. You could see right here that the stock managed to shoot higher. And that is how the 15-minute candidate reversal actually looks like. The beautiful thing about these three strategies is even though the FedEx happened after 11 on the 15-minute, is most of them are actually happening early. I just want to mention real quick, we have a 1-day special. It's actually, I'm sorry, it's actually less than a day now because it's night. It actually is ending in 3 hours, 44 minutes. You could get 1 month of my service and the algo trendline class. It's a 1-day offer. T3 was doing this as a promotion for my 600th video, but I've been spitting out so much content recently that we actually, we actually ended it up, doing it on a much later video here on Newsbeat Show 617. It was supposed to be like a 100th anniversary video. So, again, in this environment, I've been, producing a lot of content. I hope you guys have been enjoying that content. But if you are watching this still and you like our strategies and you want to see us apply them in real time, the truth is, I don't just do these videos for you. I do it for the room members of mine. I actually do these videos. I share them with you, but I do it for our community. I also don't mind helping you guys. That's why it's a public video. And in this case, it was a promotional video. But again, if you don't want to sign up, don't sign up. That's, honestly, much love. It's all good. But in 3 hours and 43 minutes, the deal does go away if you were interested. And that's about it. I really, just some final thoughts here. I really, really, really encourage you to look at this market and not get flustered. I know it's a frustrating market. I know that's much easier said than done. I know that you could just look at the market here and say, oh my God, why my confidence is through the floor. I don't know what I'm doing anymore. Oh, what's going on here? It is the market. It is not you. And you just must constantly adjust and evolve. So what I am going to tell Newsbeat Live members tomorrow, I'm going to turn to them and say, what Mark 5 do you like? And I'm going to be bringing up Mark 5s that I like. What 15-minute candidate reversal strategy do you like? And I'm also going to bring up ones that I like as well. Which Know Your Limit 21 strategy do you like? And I'm going to bring it up as well. We work together as a cohesive unit. A cohesive unit is the best way for trading rooms to go. It's not all about the guru. I'll say it again. I am by far the second most valuable thing in the Newsbeat live room, but by far above me, the number one value is the added value of our entire community, people. people who help, our moderators and people who contribute in chat. You guys make the Newsbeat live room what it is. You guys make us great. It's not the Newsbeat live room has honestly become so much bigger than me. It is just far. It has just blown me away by epic proportions. And again, really, it's thanks to you that I fight so hard. It's thanks to you that I always try to put out the best content humanly possible to help bring you guys to the next level. It's thanks to you that you guys make the Newsbeat Live Room T3 Live's #1 trading room destination. It's really thanks to you who find the value of what we do here, and it's thanks to you that I will continue to fight for you literally until my last breath. I will do everything I can. Somebody, my kid's teacher, just real quick, not to go off on a tangent here, kid's teacher was asking my 5-year-old, what are they grateful for? What are they grateful for? So of course, you're learning the word grateful. So, Daddy, what's grateful? It's like, what are you happy for? So my son, of course, is like, I'm happy for Street Fighter uh, and I'm happy for Luigi because he's watching like Luigi's Mansion, some game on the Nintendo Switch, and I'm happy for mommy and daddy, and I'm happy for basketball, and I'm happy to be nice to people, and he's saying that, and um, he literally stopped and asked me, my 5-year-old, and here, just to show you, I always carry a picture of him by my desk. That's dude over there. That's my dude right there. That's me smiling. Um, Literally, he comes to me and he's like, Daddy, what are you grateful? And he says, grateful for. And I stopped and I literally told him, I said, I am grateful because I have two families. He's like, so he stopped and he looked at me and he's like, you have two mommies and daddies? He asked me. And of course, like I almost broke down. And he's like, you have two mommies and daddies? And I was like, no. I have all of you guys. I love you guys more than everything in the world. And I also have the Newsbeat Live Room, my second family in which I work with and spend all the time with. So I told him that last week. This happened last week. So every day since last week, he's been saying, Daddy, have fun working with your family. And he says that to me every day. The dude's 5 years old. It just kills me every single time. But I just thought I would share that with you. Again, if you are interested in this 90% off deal, it is for new subscribers. Take advantage of it now. But I hope you guys enjoyed this Newsbeat show. Slap the thumbs up if you enjoyed it. Share it with somebody if they just want the strategies. The deal will probably be almost over by the time they watch this video, unless they do it really quickly. But if you feel that you know somebody who can, um, if you could help their trading by sharing these strategies, I really encourage you to do so. Happy trading, make money. And I'll see all you new guys and Newsbeat Live members tomorrow on the Newsbeat Live trading broadcast. Have a wonderful evening.